digesting earnings, so let's address another set. We've got Pavitra Shankar, the MD at Brigade Enterprises, joining in on the show right now. Pavitra, hi, morning. Good to have you on the show. Q2's been good for you in terms of your pre-sales, especially when it comes to residential. But, your peers have been reporting a drop in this metric on account of the Shraddh period in the second quarter as well. Tell me what worked for you in particular, and what kind of levers did you see aiding your growth?
Hi, good morning. Thanks for having me. Yes, we did have a pretty good Q2. We are also positive about the rest of the financial year. I think our team has done well, not just selling new launches. I think the entire industry has been affected by the pace of new launches in terms of getting approvals. But we do have existing inventory that our team was able to sell that is under construction or close to completion. And I think that has really supported the numbers. So, the market is still very positive. Residential demand is still good. So based on all those things, we're feeling pretty confident about the rest of the year as well.
What is your sense in the way how the luxury and the non-luxury portfolio is moving for Brigade and for in the real estate sector per se?
So for Brigade specifically, we've predominantly been looking at mid-segment, that is mid and upper mid-segment. For us, that used to be around 60 to 1 crore ticket size is what we used to define as the sweet spot. But over the last couple of years, that's really changed dramatically to be more from 1 to 1.5 crores in our key markets of Bangalore, Chennai, and Hyderabad. So we've seen some like-to-like price increase for the same market, same product. And a lot of that price increase you've already seen in our numbers over the past couple of years. Brigade is also getting into more of the premium and luxury segment. So while I would not call it super luxury, in some of our, in all of our key markets, actually, we have been launching projects that are more in the luxury ticket size. So those are doing well and well accepted. Of course, the momentum and sales velocity of those will naturally be different from the mid and upper mid segment. But I think in the long run, or at least in the medium term future, we see that there will be strong demand in the luxury segment as well. It's just a question of, having the right sort of product in the right market and locations as well. That still holds true.
Pavitra, not just your diversification into other cities, but I want to talk about the DRHP that you filed for your hospitality business IPO. Tell me what's the timeline like and how's the business looking?
So because we have filed the DRHP, that was on October 30th, we have a number of publicity restrictions, so can't speak too much about it. But typically, the SEBI approval is about 90 days. So we're not actually able to speak too much more about the performance of the business.
So back to what we can focus on, your realizations are up by 45%, broadly 10,000 rupees per square foot. How much of that is largely a function of compulsion which came because of increased prices of land bank or increased prices of labor, cement and steel?
So I think the best metric to look at that way is where we were a year ago, same quarter. Our average price realization in Q1, Q2 of FY24 was around 7,500 rupees. That same pricing, if I look at Q1 of FY25, so the first quarter in this financial year in our portfolio was around 9,500 rupees. I think that is mostly the like-to-like price increase that we've seen, which is upwards of a 35% over the last couple of years. In our last quarter, our average price realization is more like 10,800 rupees a square foot. That increase has come more from having launched premium projects like Brigade Insignia in Bangalore, Brigade Icon in Chennai, where the average price per square foot is substantially higher, 12,000 in Bangalore, 26,000 in Chennai. So that's where you're seeing the premium and the luxury movement coming in. But as I mentioned, the like-to-like itself has seen a dramatic increase of about 35% in the last 18 to 24 months.
I want to talk about the net debt as well right now. While it's come down in the second quarter, but wanted to understand about the recent QIP as well, that you've raised about 1,500 odd crore rupees. Is that now factored into your net debt figure that you've reported?
Yes, that's actually why it's looking so low. So we did a QIP of 1,500 crores. Our gross debt has been around the same. It's been hovering around 4,500 crores or so. And it's predominantly, it's about 90% securitized for our lease, rental, and hospitality portfolio. There's a little bit for CapEx in the same two verticals and a small amount in the commercial for sale construction financing as well. So nothing has predominantly changed on the debt front. It's just that we've done the QIP for 1,500 crores. So on a net basis, because it's net of cash and cash equivalents, it's looking very low.
Okay. But if one looks at the trend, which is very important for, let's say, our viewers here who aspire to invest in real estate stocks or they own real estate stock, do you see this kind of a demand trend to last for 3 to 5 years? And when do you see the cyclicality of the real estate sector would kick in?
It's tough to call how long this cycle is really going to last. I think it's been through the industry, at least on the residential front, which most people sort of deem to be the benchmark for the health of the sector, has really been on the up and up only since post-COVID. So prior to that, it was, we were constantly reeling from some shock or the other, whether it was demonetization or RERA or introduction of GST, which are all good things in the long run, but it impacted the industry on an operational basis for a while. So only post-COVID have we really seen the price run up. It has been a dramatic run up. So I would say that there is still a lot of demand across all the major markets in India, in terms of tier 1, and there is substantial growth in tier 2 cities as well. So considering the country's growth, job prospects, economy, it is the brightest economy across the globe and expected to grow at upwards of 6.5% to 7% a year. I think structurally the cycle is good and still has some legs on it. I think pricing has also sort of we've seen enough price increases. So to expect the same kind of price increase seems challenging for us to assume that. So if pricing is stable now, I feel the demand will still continue to be stable. It will still be fairly affordable. Interest rates are still at 8.5%, 8.6% for home loans, which is all helpful for people to make their first home buying investment or upgrade to luxury.
I'll wrap it up with one final point, which is what, this is a conversation which I was having with Abhishek Lodha. And he said there are two ways to look at the real estate sector. One is hike, which is increased prices. Second is demand. And for that, the two numbers he uses is the GDP growth to understand the demand and the wage growth to understand the price. What are your views on both?
Well, naturally, those are definitely the factors as well. If the economy is doing well, and if you're seeing that in terms of employment, and employment in the sectors that are able to afford real estate. In our key markets of Bangalore, Chennai, and Hyderabad, we're seeing substantial economic activity from GCCs. Now, the employment that happens at these GCCs is much higher quality than what people assume is the IT and the tech industry. Their wage growth and their capacity to earn is substantially higher. All of that, I think, is also leading to the strong demand for residential, and also you're seeing the increase in demand for premium because of that. So, as everyone is moving up that chain, you're seeing that in terms of their preferences for more premium goods, whether it is in housing or auto or luxury or whatever it may be, in the entire consumer segment. So I would certainly support that view.
Really appreciate your time. So glad you could join us, and good luck going forward.
Thank you.
That's Aisha.
If you like this video, then like, share and subscribe to ET Now.